All right, today we're going to be talking about Melinda Flowers. She is 18, she lives with her parents, and will be heading to college in the fall. She worked around 10 hours this week during senior year and at a local ice cream shop, and 40 hours a week during the summer. So let's take a look at her W-2. On her W-2, again, we have her employer's name and address. We have her name and address. We can see her social security number. This is how much she made for the year, $12,741. She paid $534.96. She had $789.94 withheld for Social Security tax and $184.74 withheld for Medicare tax. Those two values do not factor in to the tax that she has to pay on her 1040. So these are taken out, and that's just kind of how it is. There's no saying, but I paid I paid $700, almost $800 in Social Security tax. And having that count toward her income tax, or what she has to pay. So we'll see how that plays out in just a minute here. So scrolling down, I kind of already pre-filled this out just for the sake of time, so I'm not going back and forth, but as you see, we have her first name and initial, last name, social security number. If you were filling this out yourself, you would probably do it online. Digitally. I wouldn't imagine you would want to hand fill out your tax form and send them in. So you could type all this in, and it would ask you step by step for all the important information. But here's what it looks like on the page. Social security number, and then talk about wages. So we take that from box 1 of the W-2. So here's box 1 in the W-2. We take that value and we write it here. This line is for us to write the cents. So $2,741.00. Taxable interest, we don't have any of that for this activity. Unemployment compensation, same. So her adjusted gross income, these would be other kind of income areas that would add to this amount to give us our total gross income. In this case, it's just the amount that she had. Okay, so if someone can claim you as a dependent, check the applicable boxes below. So we'll talk about what this looks like in just a minute. She's 18, but she does live at home. So I'm assuming her parents would claim her as a dependent. And so based on the worksheets down here, we take the amount from line 1 and add 350 and then enter the total. The minimum standard deduction is $1,050. And so for line C, enter the larger of line A or B. So the larger between A and B was the 13,000 value. The maximum standard deduction, if single, is $6,350. So that's the maximum standard deduction. And then enter the smaller of line C or D here. This is your standard deduction. So the smaller from C and D is line D, so $6,350. The standard deduction is out of the income that was made It's what everyone gets to subtract from their income um, bef- um, before being taxed. Like the remaining amount is the amount that is taxed. So the standard deduction. Uh, an exemption amount, she was single, so I entered 0. And then it's a little bit different for married filing jointly. And then add lines E and F together. So we take these, we add them together. I get $6,350. So if she was not claimed as a dependent, so if her parents did not claim her as a dependent, the amount on line 5, for being single, her standard deduction is $10,400. Because that's the total standard deduction and an exemption. But we did check the box on line 5 that she was a dependent. If you are not being claimed as a dependent, you get to subtract a little bit more money away from the total amount that you owe. Okay? So line 6, subtract lines 5 from line 4. If line 5 is larger than line 4, enter 0. This is your taxable income. So subtract line 5 from line 4. So here's line 5. We subtract it from line 4. So 2,741 minus 6,350, and that leaves us with $6,391. This is the taxable income. So we figured out some, like the standard deduction, and the standard deduction's here. So here's what she made. Subtract the standard deduction, and this is what she has to pay taxes on. This amount here, box 6. A quick side note. There are several deductions that can be applied. They are incentives. So one of the ways that the government can get people to do things that are beneficial for society, or things that the government has deemed beneficial for society, that they can't make you do, but they can give you incentives to do. So, for example, interest on certain like home loans. So owning a home is good for, it's generally good for society when people own homes. It means they're settled, they're not going to move around. They are, not that those are bad things, but that they're paying property taxes and those are going to local schools. They have made this investment, so they're most likely working, maintaining a job, being kind of a productive citizen. From the government standpoint, home ownership's a good thing, and so to make that an incentive for home loans, sometimes you can take a deduction from your interest, and what ends up happening is you bump this number down. So if you hear like, oh, I need to do like itemized deductions, which on the 1040 EZ you wouldn't do. It would be another form, but that would just probably be like a standard 1040. But you can subtract deductions out. And a lot of times there are caps. There's, you can't just donate what you owe in taxes that you don't have to pay taxes, or those kind of things. A lot of times there are caps, but deductions, so like charitable giving. So if you give to an organization that is a nonprofit, you get a piece of paper at the end of the year that says how much you donated, and you are allowed to use that number to figure out an additional deduction from the amount that you owe here. So deductions help bring this number down. Sometimes it's credits, like education is another thing that's really, the government has deemed beneficial. So if you're in school, you're taking out like student loans to pay for school, a lot of times your interest on the student loans can be applied as a deduction. There are also some credits for some like deduction credits for being in school that bring this number down. The lower you make this number, the less taxes you have to pay. And the offset is that you're doing maybe what the government has deemed beneficial, and because of that, they're charging you less in taxes. Okay, so that's just a little note there on deductions. Okay, so federal income tax withheld. So again, here's what she made. This was her standard deduction, and she could increase the amount that she's taking out from her from what she owes in taxes with other deductions. Okay. We're looking up here. Here's the income tax that was withheld throughout the year from her paycheck, $534.96. So that was the money that every paycheck, there's a little bit taken out, withheld from her paycheck and sent to just kind of be waiting to pay for whatever taxes she owes. Earned income credit, we're not going to worry about that. Non-taxable combat pay election, we're not going to worry about that. We're adding lines 7 and 8A. And we have $534.96. That's how much she sent into the government from each paycheck to pay her taxes at the end of the year. The amount of tax that she owes, we're using line 6 above, and then we're finding in the tax table in the instructions. So here's line 6. This was the amount she ended up owing, $6,391. Not owing, sorry, the amount of her taxable income. So then we bring it up to this table, right? This is our progressive tax system, which means that as we progress to making more money, the part for each level that's above the level before it is taxed a higher rate. And that was explained in the last video. So she lands right here in the first bracket, I would call this. And that's so she owes 10% of her taxable income, not the total income, just the taxable income. So she doesn't owe 10% of this. She owes 10% of this. So 10% of $6,391, which ends up being $639.10. That's 10% of that. And then healthcare, we're not factoring that in. Add lines 10 and 11. This is the total tax, $639.10. So here's what she owes. Here's what she paid. I'll highlight those things in red. In red, this is how much she owes in taxes. Now, she could bring that number down had she have had like charitable donations or other itemized things that she could deduct from that amount. Here's what she paid. I'll highlight that in purple. This is what she sent from each check, set aside for tax purposes to pay taxes. But here's what she actually ended up owing. So unlike the last video, if line 9 is larger than line 12, which is not the case here, line 9 is not larger than line 12, you would subtract these and get a refund. It means that you paid more here from each check than you owed here. But that's not the case for Melinda. For Melinda, Line 12 is larger than line 9. So we're going to subtract $639.10, and we're going to subtract out $534.96 from that. And that leaves us with $104.14. This is what she owes. This is the amount she owes in taxes. So this is what she sent from each paycheck. This is what she owed total. And this is how much she came up short. So she didn't have enough set aside to pay it all off. So when you hear people talking about how they owe taxes, a lot of times that's the case. They didn't have enough removed from their paycheck throughout the year to cover the amount of tax that they owe. So she would have to send a check or look at details on how to pay this back. $104.14. She did, what this does mean is that throughout the year, her paychecks were larger because she didn't have a lot taken out here in each paycheck for her federal income tax withheld. So she would make, her paychecks would look better, but she ended up owing at the end. She could go back and fill out a W-4 form and adjust the amount of federal income tax withheld on her W-4 so that she doesn't have to owe again next year, to kind of reduce the likelihood that she would have to owe next year. She probably had very, very little withheld, and that's why she ended up owing. So hope this is making sense. This will be our last one here, and then next couple videos we'll talk about just different types of taxes. But hopefully you see how straightforward filling out these forms are. And a lot of the hard work comes in figuring out what you actually owe. And also, like if you have any deductions, kind of applying those deductions, which we didn't look at today.